What is going on, crypto fans, and welcome back to Bitcoin Bulletin, your ultimate source for the most electrifying updates shaking up the digital asset world. The pace of news is absolutely breakneck right now, and if you're not plugged in, you're missing out on some monumental shifts. Today, we've got blockbuster stories that will have you on the edge of your seat, from institutions making massive plays that could redefine value itself. We're diving deep into the strategies that are reshaping the future of finance and uncovering hidden reserves that could surprise everyone. Let's get straight into it. First up, we're talking about a seismic challenge to an age-old store of value. Next, we're looking at a bold prediction that could present a massive opportunity for those ready to seize it. Some analysts believe a significant dip is not just possible, but potentially the real entry point for massive gains. We'll break down the signals and what it means for your strategy. Then, we're tracking the moves of a major player that continues to aggressively expand its digital asset holdings. Discover how they're funding these massive acquisitions and what it signals for their long-term commitment to this evolving market. And finally, we uncover surprising sovereign wealth in the digital realm. A significant nation is revealed to be holding substantial assets through mining operations, adding a new dimension to global digital reserve discussions. You won't want to miss this. Make sure to smash that like button, subscribe to Bitcoin Bulletin, and ring that notification bell so you never miss an update. The crown jewel under threat. Get ready, because the narrative around what constitutes a true store of value is undergoing a radical transformation. For centuries, gold has reigned supreme, a tangible symbol of wealth and stability. But a new contender has emerged, and it's not just knocking on the door, it's actively challenging gold's long-held dominance. We're talking about Bitcoin, and its market capitalization has now climbed to represent a significant 2.2% of the global M2 supply. This isn't just a number. It's a powerful indicator of its growing legitimacy and adoption as a serious reserve asset, propelled by institutional investment and the landmark approval of spot Bitcoin ETFs. These ETFs, greenlit by the SEC, have injected billions into the market, fundamentally altering the perception and accessibility of Bitcoin for large-scale investors. The macroeconomic climate is certainly fueling this shift. In an environment marked by fluctuating bond yields, ongoing fiscal stimulus measures, and persistent concerns over the stability of fiat currencies, particularly the US dollar, investors are actively seeking diversification and robust hedges against uncertainty. Bitcoin, with its decentralized nature and borderless accessibility, presents a compelling alternative. Unlike gold, which can be subject to governmental policies and logistical hurdles, remember those tariffs on gold imports. Bitcoin operates outside the control of any single nation. This inherent, sovereign-proof quality is a major draw, positioning it as a digital alternative to gold's traditional safe haven status. The institutional appetite is undeniable. Emerging research indicates that a staggering 83% of institutions are planning significant portfolio allocations towards cryptocurrencies, with Bitcoin and Ethereum leading the charge. This contrasts sharply with the 15% currently holding gold. The allure for these institutions lies in Bitcoin's potential for diversification and its role as a hedge against macroeconomic volatility and currency devaluation. While gold retains its appeal for its historical reliability as an inflation hedge and its tangible security, it also comes with its own set of challenges, like secure storage and transportation. Bitcoin, on the other hand, offers unparalleled flexibility and ease of transfer. And let's talk performance. Over the last decade, Bitcoin has delivered astronomical returns, dwarfing gold's performance. While gold has seen impressive gains, Bitcoin's cumulative returns have been in the tens of thousands of percent. Even over shorter periods, like the past 3 years, Bitcoin has delivered a staggering 429% return compared to gold's 90%. This remarkable growth is a testament to its unique properties: portability, divisibility, and a resistance to political interference that traditional assets simply cannot match. So, where does this leave your portfolio? Modern investment strategies are increasingly embracing both gold and Bitcoin, recognizing their complementary roles. Gold offers stability and historical precedent, while Bitcoin provides the potential for significant growth and global transferability. Experts suggest allocations ranging from 1–5% for Bitcoin and 5–10% for gold, a balanced approach to navigating today's complex financial landscape. But is this bullish trend set to continue uninterrupted, or are we on the verge of a significant market recalibration? Stick around, because our next story dives into predictions of a major September correction and what it could mean for savvy investors. The September sell-off signal. Prepare yourselves, because the market sentiment is buzzing with predictions of a significant shift, and one prominent commentator is calling for a potential September correction that could see Bitcoin dip below the $100,000 mark. This isn't just idle speculation. It's a detailed analysis based on market signals and historical patterns. The key event on the horizon is the upcoming FOMC meeting in September, which is widely anticipated to bring about a major interest rate cut. According to the pseudonymous trader Dr. Profit, this cut could trigger the first substantial correction seen across both the stock and crypto markets since 2020. Historically, these significant market downturns often follow meaningful rate cuts, emerging from periods of uncertainty and divided market opinions. Dr. Profit points to several bearish signals currently flashing on the Bitcoin chart. On-chain data suggests a concerning pattern. Retail investors appear to have bought in at the higher end, between $110,000 and $120,000+, while larger, more established wallets accumulated their positions earlier, around the $98,000 to $110,000 range. To shake out these less experienced investors, often referred to as weak hands, Bitcoin is likely to experience a price drop to the $90,000 to $95,000 zone, what Dr. Profit identifies as the maximum pain point for retail traders. This aligns perfectly with the broader correction narrative. Furthermore, the current euphoria and the burgeoning alt-season hype are being viewed by some as a potential bull trap. While retail investors are enthusiastically pouring into the market, institutional inflows through ETFs have reportedly remained weak. This could signal that institutions are actually distributing their holdings rather than accumulating them, with the current liquidity being offloaded onto retail investors masked by what appears to be manufactured bullishness. Dr. Profit has been actively positioning for this scenario, having rotated 10% of his Bitcoin and Ethereum profits daily into short positions since August 18th. His current portfolio strategy reflects this cautious outlook: 60% in cash and shorts and 40% in spot holdings. He is also strategically scaling into shorts using 5x leverage, with plans to increase exposure should Bitcoin climb towards the $124,000 mark. The trader's roadmap is ambitious: a September correction down to the $90,000.95,000 range, followed by a subsequent rally that could see Bitcoin reach $145,000–$150,000, and Ethereum soar to $7,000–$8,000. The core of this strategy is to accumulate more coins by selling into strength and then buying back at lower prices during the anticipated downturn. The September correction is the real opportunity, he emphasizes, reiterating that the prevailing bullish sentiment is designed to ensnare retail participants. While some are bracing for a dip, others are making bold moves to capitalize on the market's ups and downs. Is this a sign of strategic foresight or a risky gamble? Next, we're looking at a company that's doubling down on its Bitcoin strategy, funding massive new purchases in a way that's turning heads. Aggressive accumulation fuels digital reserves. In a significant display of commitment to its digital asset strategy, the company formerly known as MicroStrategy, now rebranded as Strategy, has once again made a substantial acquisition of Bitcoin. The firm purchased an additional $357 million worth of the cryptocurrency last week, funding this massive buy by resuming its common stock offerings after a nearly month-long pause. This move signals a return to its aggressive playbook, demonstrating a continued belief in Bitcoin as a primary treasury reserve asset. The company issued $310 million worth of its shares to facilitate this latest purchase, marking a return to its established method of financing its growing Bitcoin hoard. This acquisition comes after Strategy had previously adjusted its equity issuance policy, which had initially imposed restrictions on issuing common shares when the stock traded at a certain valuation. While this framework was intended to reflect financial discipline, the company recently gave itself more flexibility by stating it would set aside these restrictions when otherwise deemed advantageous. This policy change, announced alongside its strong second-quarter earnings performance, which included a $10 billion profit, was lauded by analysts as a pragmatic approach to capital management. The company clarified it would no longer issue common stock if its market value to net asset value (MNAV) ratio fell below 2.5x, or if its shares traded at less than a 2.5x premium to its Bitcoin holdings. This adjustment aims to optimize the issuance of shares to maximize Bitcoin acquisition per share. Despite the company's strategic moves, its stock has seen some volatility. Strategy shares experienced a decline of nearly 2.7%, trading around $348 on Monday, according to Yahoo Finance data. This represents a notable cooling off from a recent high of $457 reached last month, although the stock remains up by an impressive 20% year-to-date. Meanwhile, the price of Bitcoin has also seen a slight dip, falling to $112,580, down 1.6% over the past 24 hours. However, Bitcoin itself has also shown strong year-to-date performance, up 20% according to crypto data provider CoinGecko. This interplay between the company's stock performance and Bitcoin's price is crucial, as Strategy leverages premiums on its stock to acquire more Bitcoin. To further diversify its funding sources, Strategy has also introduced various types of preferred shares this year. Its most recent Bitcoin purchase, for instance, was partly financed through offerings like SRTK, SDRF, and SDRD. These preferred stocks come with specific obligations and dividend payments, providing alternative avenues for capital infusion. However, not all market participants are entirely convinced by this strategy. Andy Constan, CEO and CIO of Damped Spring Advisors, has drawn parallels between Strategy and a Ponzi scheme, arguing that the company might eventually need to issue common stock to cover dividend payments owed to its preferred shareholders. Strategy has been approached for comment on these assertions. Under an at-the-money (ATM) offering program established in May, Strategy retains the capacity to issue an additional $16.7 billion in common stock to further bolster its Bitcoin reserves. As of Monday, the company held approximately 632,500 Bitcoin, valued at a staggering $70.5 billion, according to Bitcoin treasuries. Stephen Lubka, VP of Investor Relations at Nakamoto, views Strategy's flexible approach to equity issuance as an advantage. He noted that this adaptability makes the company's future funding moves less predictable, particularly regarding the actions of co-founder and executive chairman Michael Saylor. The end state of this is that now you really don't know if he's going to hit the ATM every week, Lubka commented, highlighting the increased uncertainty surrounding Saylor's next strategic financial maneuver. While major corporations are making headlines with their digital asset acquisitions, another significant player is emerging from an unexpected sector: government-backed operations. Stay tuned as we reveal which nation is quietly building a substantial Bitcoin reserve through mining. UAE emerges as major sovereign Bitcoin holder via mining. In a development that underscores the growing global acceptance and strategic acquisition of digital assets by nation-states, blockchain analytics firm Arcam has revealed that the United Arab Emirates (UAE) government holds approximately $740 million worth of Bitcoin. This substantial reserve, equivalent to about 6,300 Bitcoin at current valuations, is not the result of direct market purchases, but rather stems from the UAE's government-backed mining operations. The coins were accumulated through Citadel Mining, a publicly listed mining company in which the Royal Group, via its international holding company, holds a majority stake. This revelation positions the UAE as the world's fourth-largest sovereign holder of Bitcoin, marking the first time the scale of its digital asset reserves has been publicly documented. The significance of this discovery lies in its origin. Unlike other nations that might acquire Bitcoin through exchanges or private deals, the UAE's holdings are a direct product of its own mining infrastructure. This approach not only demonstrates a strategic effort to build a digital asset reserve, but also highlights the increasing sophistication and integration of cryptocurrency mining within national economic strategies. Citadel Mining's public listing and majority ownership by a prominent UAE holding company provide a layer of transparency and legitimacy to these operations. Arkhem's on-chain analysis has been instrumental in tracing and identifying these significant holdings, bringing them into the public domain and confirming the UAE's substantial presence in the Bitcoin ecosystem. This development has several key implications for the broader cryptocurrency market and international finance. Firstly, it validates Bitcoin as a viable asset for sovereign wealth management, moving beyond its perception as a purely speculative investment. The UAE's proactive approach through mining suggests a long-term strategy focused on accumulating digital assets rather than just trading them. Secondly, it places the UAE among a select group of nations, alongside countries like the United States, Germany, and Finland, that are known to hold significant Bitcoin reserves. The fact that these holdings are derived from mining operations rather than market purchases could also set a precedent for other nations looking to diversify their reserves into digital assets in a more controlled and potentially cost-effective manner. The increasing involvement of nation-states in acquiring and holding Bitcoin, whether through direct purchase or mining, signifies a maturing market and a growing recognition of Bitcoin's potential as a digital store of value and a hedge against traditional financial system risks. As more countries explore or expand their digital asset strategies, the dynamics of global finance are likely to continue evolving, with cryptocurrencies playing an increasingly prominent role. The UAE's substantial, mining-derived holdings serve as a clear indicator of this ongoing transformation. From sovereign wealth to corporate strategies and market predictions, we've covered a lot of ground today. But before you go, let's do a quick recap of the biggest stories that rocked the crypto world this week. All right, Bitcoin Bulletin crew, let's do a lightning round recap. Institutions are betting big on Bitcoin, challenging gold's status as the ultimate store of value. A top trader is calling a potential September Bitcoin correction as a massive buying opportunity. Strategy is aggressively buying more Bitcoin by issuing stock, doubling down on its crypto reserves. And finally, the UAE has revealed significant Bitcoin holdings generated through its own mining operations. Don't forget to like this video. Subscribe to Bitcoin Bulletin for all your crypto news, hit that notification bell, drop a comment with your thoughts, and follow us on all social media platforms for even more updates.